Welcome to today's video. If you open your chart and see these market prices, where would you place your support level? This is an hourly chart of Euro and Swiss franc. Looking at these lows here, where can you place this level? Remember, the more prices this level captures, the more valid it becomes. I will be showing you a simple technique to achieve a desirable result. Let's select our horizontal line from here. Once your marking is accurate, it simply means you are likely to reap from future market movements. So, the first step to trade using support level is getting this level right. To get this right, you must consider the price rejections that happened in the market. This level where the rejections occurred more will most likely be a better level to mark as support. We have lows here, so we try out these levels in other to get the best level. It captured multiple price levels here. If you want, you can move it higher to touch this low. Let's take a look at another level. A second line will ensure more prices are captured. We place these lines, hoping future prices will react to it. And if it does, it can be an entry point. Here, an engulfing pattern was formed. Assuming you have studied your chart and placed its support levels before this happened, you would be gearing up to take part in the market at this point. An aggressive trader can decide to take a shot here. A short position will look like this. Stop loss level should always be above these levels. This was a very good entry level. To determine the target levels, go to a higher time frame and observe previous price movements. Let's take a look at the daily time frame. This is the support line. And here are the previous price rejections in the market. Market prices are likely to react here, so it's a potential level to set a target. This line was placed below this low, because there is another price rejection below. But this level won't yield a good risk to reward ratio, so we will opt for other levels. When prices reach here, it would react to this level, and it did. So, always note this, levels like this in the market are potential targets. Mark this out as the first target. Also, this level is another potential target. This is because of the price rejections here as well. When you mark it out, remember to place it above the price rejections. Next, let's get back to the entry time frame. Now, Extend the target to this level. You would have made a huge profit if you were part of this trade. And the risk involved is little compared to the expected target. If you placed multiple positions, it will also follow this strategy. The profit target would be the same as the previous. You can use the next level for a second target. A very important thing you must also note is that these levels can also provide other entry opportunities as well as stop-loss levels. This is because of the price rejections that happened around this level.